All right, everybody, welcome to the close on this Wednesday. It's just 10 minutes before the closing bell at this hour. Now, we've got a rally underway. In fact, we've got equity averages pretty much at their best levels of the session right now. In fact, you've got the S&P up about 15 points, the Dow 30, a 106-point gain, and you've got the Nasdaq up almost 30 points. Let's, though, get into the markets. Joining us to help break down today's action, we have Laura Lee, who's been keeping an eye on the day's biggest movers, Michael Whitney, who's breaking down the moves in the dollar and the gold, I should say, today, Jamie Tyrell of Group 1 Trading, live from the Chicago Board Options Exchange, and our featured guest is Joe Saluzzi, the co-head of equities at Themis Trading. So, Joe, I got to start with you. I know how negative you can be. Retail sales yesterday. We've got Bernanke. We've got Geithner. We've got all these people saying. We've got the president telling us. Looks like pretty much the worst is over. So.
Yeah. Oh, I got to tell you, I'm tired, really, of hearing the victory laps. Everyone's taking a victory lap and saying it's all done, everything's great. But yet, when they get to the finish line, they don't seem to cross it. They say, wait a second, we still got a lot of work to do, and things are going to be slow. So rather than looking at it as a W or a V-shaped economy, we've got a new letter. It's an L. Okay, this is an L-shaped recovery. We don't know what's on the other side of this L. We know the third quarter and fourth quarter will be artificially induced by government spending, and you'll have a large GDP growth there, at least 3%. What happens in first quarter, second quarter next year? No one's talking about that yet. So I'm going to discount quarter 3 and quarter 4 right now and continue my L out and make my decision later.
We had Ken Fisher on earlier, and he says, you know, when you have such a dramatic drop, that the rebound is as dramatic. And he says history kind of tells us this.
Well, that would be true. I agree if you're in a normal state of an economy. But when 6 months ago everyone's saying that you're on the state of Great Depression 2, I think that we got a lot more work to do, and especially when we look at some of the areas that haven't been touched yet. Haven't been touched.
Right, but he quoted, I forget, who did he quote?
Templeton.
Templeton saying, you know, everybody says it's different this time around. And
those are the four worst
time
words.
Again, and in history it shows us that, well, it's not usually different.
Well, I think this time it is. We didn't go through the biggest credit disaster since the Great Depression, and most other recessions that we've had over the last, 30 to 40 years didn't have this type of, how many firms went under? How much government stimulus went into this recovery as opposed to all of the other recoveries? I'm going to bet that this is different this time.
All right, let's check out the, let's focus on today for a moment and take a look at the rally in stocks right now. Hang on a second, Jamie. I want to bring in Joe Saluzzi here on set with us. I was talking with a bearish trader friend of mine yesterday who said all these hedge funds are waiting to get short and they're just waiting for a catalyst. He's been fighting the tape for 6 weeks and he's getting very tired of it. Is this the kind of rally is this the wall of worry that we're so used to hearing about? I mean, does it just continue to go higher and higher?
It probably will. I mean, here, as a short, this is death by 1,000 cuts. This is a brutal market for a short because it goes up a little bit every day. You don't get these big spikes that then sell off. It's just, and it's, you shake your head. But the rally is being built on intraday momentum. We've talked about this in the past. Short-term traders, article today, Wall Street Journal, day one, page 1, day traders back, okay? That should be a huge warning sign for everybody, but it doesn't mean it's going to be a problem tomorrow. It's not long-term money. We were at some clients yesterday in the Midwest, and they were talking about this, this rally. People still are very suspicious of it, but the long-term money will eventually start to have to come back in here too because they get nervous. Performance chasing is the fear of not making money is bigger than the fear of losing money at this point. So as bearish as I am, and I'm still bearish, I think you got a little bit more room here.
Are you fighting the tape every day?
Personally, I have been fighting the tape somewhat. Yes, that doesn't seem to work. It doesn't work. Okay, fighting the tape, fighting the Fed, all that good stuff. They're right. It doesn't work.
But, let's not forget, Joe, there's still a lot of companies making money in this terrible environment, although it's getting less bad, as many say. I mean, folks like Johnson & Johnson, pick your name. I mean, there are companies that are making money. So
they are making money by cost cutting, and right? And if they're making money by firing 10,000 people and they showed a better bottom line, that's going to haunt you in the end. So are you sacrificing short-term profits for long-term growth? That's what my camp says. I still think you've got major issues. Number 1, unemployment. Number 2, toxic bank assets. Number 3, housing. And now we've got a new one. Maybe we'll talk about it later. Trade war potential. But no, they blew that trade war off like it was nothing. Like the U.S. never did anything with the Chinese tariffs. That is a major, major story that needs to be watched carefully.
But we've had a story that we actually talked with a Bloomberg reporter that said many presidents, I think both Bushes and go back several administrations, that they often talk tough on trade only to kind of open up trade policy even more down the road. That's what we've seen in terms of history.
I mean, that's possible.
And maybe that's why we don't need to be worried here.
Well, I don't think you need to be worried at this one occurrence, and this could just be an isolated instrument. I think you need to be more worried about how does China respond, what happens with other countries.
But China needs us. As well as we need them.
We need them.
Well,
we are in a weakened state of negotiation right now. This economy is not where it needs to be. If you're going to fight with your biggest banker, it's probably not a good idea to be fighting right now. You may have wanted to wait on this one. But when you owe it to the unions who gave you the votes, you have no choice but to go out and say, okay, we'll do it. Bush 4 times denied this request by the international trade, but Obama picked it up on the first time.
All right.
What a place that we have to take a break.
You write in and warn me, Jill has some conspiracy theories.
I'm holding
now they're coming
these
out.
thoughts. All right. We do have to check in on the closing bell. Sounding on this Wednesday, September 16th, 2009.
Thanks very much. Let me quickly ask Joe here on set, since we have you, what you think about the tech. I mean, the tech sector has really been the darling of the stock market. Everybody who comes on, especially if they're bullish, say, oh, I love tech now because it's defensive and you get growth at the same time. What do you think about technology here?
Well, if I'm bearish overall, I'm bearish. But I mean, technology, things like, you know, gadgets like the iPhone and things and computers, people will still spend money there. People love upgrading their handsets, right? There is still some performance there, but again, I'm bearish on the whole economy, the whole market, so I don't like tech either.
You know, I was talking with John Herman on the phone today, and he was saying 3 separate reports show business CapEx spending is going to pick up. He said durable goods up 7%, industrial production up 3%, imports in the foreign trade numbers showing 6 to 7% gains.
He's never seen a number he hasn't liked.
Which is why we need to get the two of you on together.
He's backing off a little bit on the jobs situation. He did think we were going to add jobs in the month of October. Now he's saying maybe November, December. I think I heard him whisper January there.
Well, isn't that the most important thing? Right?
But what do you think about business spending? I mean, you know, who were we talking to yesterday that said at some point you just have to go and buy a new suit because you get holes in your pants, right?
Right.
Well, sure.
Well, the echo
if you
effect.
didn't add a Vista,
right.
you're going to have to add a Windows 7.
Right. But when still? Okay, but if you're unemployed and you don't need that suit because you're not going to work, well, you don't have to worry about that. So the unemployment rate is still the key to watch. You know, there are things that what am I looking for to see if this is going to turn around? One thing that we haven't mentioned, you know, mergers, private equity deals, we would like to see some more of that. You're getting a little hint.
You're starting to see it.
You're getting very, very little. But you would like to see some real money being committed because they see low valuations. Okay, maybe that'll be a sign.
But very little means something after a year where we've seen...
Well, that's like a second derivative argument, right? The rate of change is lower now. I don't buy the second. I want to see more. I want to see a lot of it. But I still go back to my major themes of unemployment and housing. And Meredith Whitney the other day, still down 25% she sees housing. Okay, she had a little uptick.
She hasn't seen the number she liked.
Well, she saw Goldman Sachs' number a month back, and that's what started this rally. That Sunday night when she upgraded Goldman, the midnight upgrade, this rally started that day. Okay, that day, and it hasn't looked back.
All right, hang on for a second. All right, we got to talk a little bit more about health care as well. After weeks of...
Hey, Zara, thanks very much for that. We're going to get back now.
Yes, we are, to Joe Saluzzi over at Themis Trading. So, Joe, I'm thinking, all right, if we buy your premise, and I know I give you a hard time. I don't really disagree necessarily. But if you buy your premise, then what are you looking for when we start to see things fall apart in the market?
Oh, I can give you a million signs. The problem is...
No. Where's the best place to go, though? I mean, if you're going to short this market, if you think we're going to get a catalyst to come down.
I want to know first, what's the sign, though?
When things start to fall apart?
Yeah. See, okay, I thought you were going to play.
The market will not fall apart because the sellers get aggressive. It's when the buyers, these intraday buyers, disappear. They're the ones that are holding this up. It is not long-term buying, and I'll give you a million reasons. You can point to the ICI flow of funds. It doesn't show you that the long-term money's coming, the day trade is back, and all that good stuff. Sellers just aren't selling right now. But when all of a sudden you get that downtick, and then they start to see that they have to get aggressive, then you can just feel the tape in something like it. Right now the tape's up, the tape is strong.
All right, but if I'm sitting at home on my couch, I maybe can't feel the tape. I mean, what specifically? Is it a dramatic drop on heavy volume? What?
You would need a big, I mean, the problem is these big drops are just getting bought up. There's signs to buy the dip.
Right.
You need at least a few days of it. One day drop means nothing.
But if you get a 5% drop, I mean...
It still may not mean it's such a momentum fast market, but I think I think you do rally to the end of the month. I think that the performance chasing will continue because they got the quarterly window dressing coming. Beginning of October, and we all love October, that could be the sign that you really want to watch when these fickle buyers that decide that they want to disappear. You know, would I want to put on a short today? No. Do I want to put one on in a couple of weeks? Probably.
But wait, we only have 5 seconds here. If you're going to, which double short ETF
I don't like any of the doubles. I hate the doubles. They're not good trackers. Just short a regular ETF. You can get a borrow. You can get a borrow on the spiders and the Qs. There's no problem there.
All right, Joe,
Mr.
thanks very much.
Saluzzi, we got to run. Thank you so much.